Well, the election is about 6 weeks away, and the candidates are not the only ones shifting into high gear. The financial markets have kicked into gear as well. The last 2 days have been some of the most volatile in months. What's going on out there? Joe Krier, president of Krier Wealth Management, is here to break it down for us. Good morning to you, Joe.
Hey, Stacey.
Are our lives affected that much come January when we have a new president, or maybe the incumbent president in the White House?
Well, I think most of the back and forth is about long-term ideology here, but the truth is that we're going to be status quo. And just like 4 years ago...
You believe that? I mean, a lot of people say we need a Republican president. I mean, that's the old theory, that a Republican president means that the markets will improve.
Sure. Well, and history shows that the markets are about the same, if not a little better, when there's a Democrat in the White House. Nobody throw tomatoes at me, please. That's just what history tells us. And when these guys are talking about things 5 and 10 years down the road, they're going to get in the White House and they're going to have to deal with what's going on in the country right this minute.
It's tough. And sometimes you have to clean up what happened before. At least that's what some people are saying about Barack Obama in his 4 years.
Certainly. And he did walk into a giant mess, as he will walk into another giant mess, or Romney will walk into a mess here. And, you know, it's all about employment and the economy. And they've got to do whatever they can to stimulate things. I think even if Romney walks in and takes over, he's going to have to take a few months just to get used to what's going on before he can make any big changes.
And then you've got Congress, who's got to go along with it.
Yeah, and Congress is a big deal. You know,
yeah.
It seems like all the focus is on the White House, but the Senate is pretty huge as far as what they've got to accomplish between now and the end of the year.
All right, there have been some positives to this election. I know some of you are like, really? There's been a huge amount of money spent, and that kind of gets spread around.
No doubt. I mean, you look at money that was sitting in savings accounts and so forth. Now it's circulating through the economy. So like it or not, all the ads that are bugging you, one, they're going to stop, but two, that money's out there, it's going to recirculate. And the other big positive is that large businesses, they want clarity. You know, they need to know whose plan they're going to have to deal with so that they can make their hiring and spending plans.
And then a lot of you are going to be happy, myself included, that all those commercials are going to go away. The bickering is going to stop. There is a fiscal cliff, however, that economists say that we are staring at.
Yes.
What are we looking at here, Joe?
Yeah, well, we're looking at a situation where we've got a lot of tax breaks that were given to help stimulate the economy 8, 5, 6 years ago, and they're all set to expire as of January 1st. If that happens, basically people are putting more money into the government and out of their pockets rather than spending it at Walmart and the grocery store. The other big piece of that is that there's mandatory spending cuts.
Yeah, let's talk about this a little bit more, because when I saw this on your, if we can flash up that graphic, guys, because we've got it, mandatory spending cuts to the tune of $109 billion. And you said that they were debating this over a couple of months ago.
Right. Well, remember last summer everybody was miserable because Congress couldn't agree on the debt ceiling.
Right. So they kicked it down the road.
Eventually they said, okay, we're gonna kick it down the road, but if we don't agree on anything in the meantime, we're going to force spending cuts on the government that are automatic and they're law. And sure enough, they haven't agreed on anything. Now those spending cuts are looming January 1st.
Okay, so the government's going to have to cut $109 billion from their budget if they don't extend this.
Right.
Okay, which is fiscally probably a good, I guess some people talk about, is it a good thing to do if you're cutting your costs? Well, sure, but...
Long term, it's good. Short term, you've got an economy that's on life support.
Okay.
So the idea is to limp the economy along until it can absorb those cuts. Right now, it certainly couldn't.
But you said that it's going to be, if we cut that much from the budget, it's going to be, what, 4%?
4.7%, and it would automatically plunge us into a recession. So what we think Congress is going to do, they're going to get together and they're going to say, well, let's put it off another year. And that's the most likely scenario here, regardless of who wins the election.
Good grief. You know, you kick the can down the road and then you got to make the painful cuts and then you keep extending those issues. All right, Joe Krier, president of Krier Wealth Management, thanks for being here.
Thanks,